Did you know you can pocket an extra $1,000 every month, tax-paid cash, without shrinking your ODSP check by a single dollar? Most people on ODSP still think the old $200 rule applies, so they're leaving thousands on the table. Stick with me for the next few minutes and I'll break down exactly how the new exemption works, show you when the 75-cent clawback really kicks in, and share the simple pay stub hacks that keep every cent you earn right where it belongs, in your wallet. Call to action. If financial freedom on ODSP matters to you, smash that like button, hit subscribe, and ring the notification bell so YouTube lets you know the second I drop the next money-saving tip. Let's make every dollar count together. Ask ChatGPT. 1. Understand the $1,000 earnings exemption. For years, ODSP recipients could only earn the first $200 of employment income without seeing their monthly support shrink. That changed in late 2023 when Ontario raised the threshold to $1,000 per month, giving workers with disabilities far more breathing room to keep paid work and provincial benefits in balance. The ministry reconfirmed the higher exemption in its May 2025 bulletin, calling it part of a Work First, Dignity First overhaul of social assistance. News.ontario.ca. The rule is simple. If your gross wages in a calendar month stay at or below $1,000, ODSP will not deduct a cent from your income support check or health and dental benefits. Go $1 over, however, and the clawback kicks in on the excess. Understanding this first tier is critical because it defines the safe zone where every hour you work actually improves your standard of living, instead of merely replacing provincial dollars with taxed wages. Think of the exemption as a $12,000 a year work allowance that lets you test different jobs, build resumes, and earn confidence, while keeping the ODSP safety net intact. 2. What happens above $1,000? The 75 cents clawback explained once your gross wages pass the $1,000 line, ODSP starts reducing your check at a rate of 75 cents for every additional dollar earned. That means earning $1.100 in a month triggers a $75 deduction, leaving you $25 net better off. The steeper rate was introduced alongside the higher exemption. The province argues that it still leaves most workers ahead, but advocates call the 75% clawback punitive. IncomeSecurity.org. The math matters. Suppose you pick up extra shifts and hit $1,600 in gross pay. The first $1,000 is ignored. The remaining $600 is subject to the 75% deduction, reducing your ODSP support by $450. Your take-home from wages might be roughly $1,400 after tax, and your ODSP check could shrink from about $1,308 to $858, leaving a combined income near $2,258. Knowing these numbers in advance lets you plan hours strategically, request overtime only when it truly lifts your bottom line, and avoid unpleasant surprises at month end. It also arms you with evidence when lobbying for a fairer, flatter earnings formula. 3. Why the exemption still matters to your real net income. Critics sometimes point to the 75% clawback and ask, is working even worth it? The answer is a qualified yes, especially within the first $1,000 band. Every dollar you earn there is a full dollar in your pocket, and because ODSP treats wages as taxable income, you also start building CPP contributions, EI eligibility, and future RRSP room, laying foundations for long-term independence. OntarioPC.ca. Above $1,000 the marginal benefit shrinks, yet it rarely turns negative unless you cross very high earnings where taxes and lost benefits overlap. At $1,600 gross wages, for example, you might still clear roughly $25 to $30 for each additional hour worked after deductions, depending on your tax bracket. Add non-cash perks, paid sick days, employer health plans, skill acquisition, and the real value climbs higher. Treat hours like investment capital, deploy them where the learning curve is steep, the resume payoff is strong, and future promotions could move you decisively off assistance. 4. Work smarter strategies. Stretching the exemption to the last dollar, the $1,000 ceiling, is a line, not a suggestion. Track your hours each pay period so your gross earnings land a few dollars below the limit that guarantees every pay stub converts 100% into spendable cash. If you expect a raise or overtime, negotiate other benefits, flexible scheduling, professional development credits, extended health coverage that do not count as income for ODSP. These perks boost your quality of life without triggering the clawback. News.ontario.ca. Another tactic is income smoothing. If your job allows variable hours, shift work from one month to the next to avoid a spike that would erode part of your check. Freelancers can invoice in stages or request deposits in low-earning months. Remember, only employment earnings count toward the exemption. Passive income, interest, dividends, royalties faces different ODSP rules, so use those streams for long-term saving while relying on wages for weekly expenses. A little foresight keeps you inside the exemption band and makes every hour of labor truly pay. 5. Reporting your earnings correctly. Avoid overpayments and penalties. ODSP's earnings rules only work in your favor when you report promptly and accurately. By regulation, you must submit proof of income, pay stubs, or a signed employer letter no later than the 7th business day of the month after you earn the wages. Miss that window and the system pays you as if you earned nothing. When the income surfaces, ODSP recalculates and labels the excess an overpayment, then claws it back at 5%, 10% of future checks until cleared, quietly eating into your cash flow. Ontario.ca. Create a paper trail habit. Scan every pay stub the day you get paid, store it in the cloud, and email it to your caseworker before month end. If your hours fluctuate, add a note forecasting next month so staff can adjust your file in advance. Self-employed recipients must also submit an annual profit and loss statement, budget for tax software, or a bookkeeper to avoid guesstimates. Before accepting any lump sum, bonus, severance, retroactive pay, ask whether splitting it across 2 months keeps you under the $1,000 band. That small step buys invaluable peace of mind. 6. Beyond the exemption. Building a career path while on ODSP. The $1,000 exemption is a launchpad, not a lid. Use the protected income window to test drive part-time roles, volunteer placements, micro-credential courses, or small freelance gigs that build your resume without risking your rent. Community colleges now funnel ODSP clients into skills development fund seats, meaning tuition, books, and assistive tech can be fully subsidized, turning the safe zone cash into a training wage. Set milestones. Start with 10 hours a week under the threshold, graduate to 15, then plan a strategic leap past $1,000 when you secure a job whose salary and benefits outstrip the clawback. Fold in CPP premiums, EI, and beginning July 2025, the new Canada Disability Benefit, which Ontario has promised not to claw back. Build a simple spreadsheet showing how each $1 raise changes your disposable income. The numbers often reveal that a full-time role with health coverage plus the federal benefit beats long-term partial support. By stepping through this ladder deliberately, you turn ODSP from a ceiling into a springboard, leveraging it to gain skills, confidence, and ultimately the income security that lets you leave the program on your own terms.